Welcome back, guys. In this video we're going to talk about trading and investing. Many people think they're just the same things, many people think they're two completely different things, but in reality they have a lot of things in common, and that's what we are going to talk about today. In this video I'm not going to show a lot on the charts. It's also not purely about trading because it's also about investing, but I think these are important lessons to learn and just info and education to have before you start trading. So at the core, trading and investing are the same things. You buy an asset and you want price to rise and sell it for profit. It's basically the same thing. Both require patience, a plan, no emotion, and also price action or strategy can help you a lot in the investing world. Now the biggest difference is the intent and the timing. Of course, trading or day trading, you want to trade small moves and you're in and out of trade, in and out position in a day, maybe in a couple of minutes, hours, maybe a day, sometimes a bit longer than a day. Investing is over the long run. You want to buy a position, buy an asset for the next months, years, maybe even more. Emotion is something very important. I've mentioned several times that emotion is a huge struggle in trading, where traders struggle with because emotion makes you do decisions that were not part of your plan, and investing is basically the same. When you invest, you usually risk more than 1 or 2% of your capital, so that's why not using your emotions and not making decisions based on your emotions is even more important. So you must have a clear plan and stick to it. Don't just buy an asset because it looks cheap. Don't just sell because you made enough profit. That's not how it works. Investing should even be more boring than trading. So here is the difference between trading and investing. Precision. In trading, you want to have a precise entry. You're looking for a move, you want to be precise. Also, if you're trading, you want to look for shorts and longs, but when price is doing the other thing. So for example, price is at $3,000. You want to look for longs if price drops. For example, price at $3,000, you want to look for shorts if price goes up. Now, in investing, it works a bit differently. Of course, you can do this in investing. You do you, that's your strategy. But in investing, you're risking more capital, as mentioned, so you want to be a bit more sure. You want to trade or invest with confirmation. You don't have to catch the exact bottom to catch the exact high to sell. Of course, you want as much money as possible, but it's better to wait for price to make the low, then gain 5, 6, 10%, and then drop couple of percentages, make a little pullback, little retest, and then buy. Of course, you miss those couple of percentages in the from the low, but you're way more certain that an actual reversal or price can actually go up. You're not trading a 1 to 2% move, you're positioning yourself in the long run for months or years to come. There's another key difference. Trading requires a set entry or a zone. While investing, of course, you don't have to invest blindly just because your gut feeling tells you to invest, but it doesn't matter that much as in trading. Let's take a look. For example, on gold, if you want to trade a move, I already talked about it. Of course, you have a set line or a set zone. Now, in gold, for example, let's take an example. You're here, price has made a new high. Of course, in a major uptrend, you don't want to buy the exact top. So you wait for price to drop a bit, and you say, "Oh, here price dropped a bit. Maybe this is a great time to invest." Of course, this is not a great best example, or don't have to think about this as an investment. Just for this example, that your entry doesn't have to be precise. You can say, "Oh, price dropped a bit. Yeah, I feel confident. Here, let's buy gold." It doesn't matter that much if it's here or here. Of course, it's maybe a 1 or 2% difference, but this won't decide if you're a profitable investor or not. Because if price is here, you make a profit either way. While trading, of course, you trade small moves. This is the daily, so maybe you trade within one candle. Then, of course, a 1 to 2% move, that's not possible in trading because you need a set entry. Maybe a little bit vague and also a bit irrelevant. But so for investing, you don't have to wait for price to hit a specific level to entry or a specific zone. Of course, you need to have a plan, but it doesn't matter that much if you wait and just say, "Okay, now I have the ball, I'm going to enter." So another key difference is risk and expectations. In trading, you know what you're risking. You're risking 1 to 2% of your capital on a broker or an exchange or your funded account. Now, in investing, you usually commit to a way larger capital, because the 1% of your capital, you're not going to invest 1% in this, 1% in that. That's not good. So the probability needs to be much higher, because in trading there's probability. You trade the probability. While in investing, you're not trading a probability on, okay, price can pump 2% now and then the move is done. No, you're trading or you're investing for the long run, so you have to have a higher probability, because also you're trading with a bigger capital, you're risking much more, so the probability needs to be higher. Now, in investing, we don't really talk about probability because we talk about probability in a certain range or a certain move in trading. It's a probability there that price will do this in the close run, but in investing it's just called a different thing, but still in the core it's probability, because you think it's probable, you think that price will go up. So I also want to share something from my experience why investing doesn't make sense with low amount of money. So when I was younger, I used to invest a couple of $100 into the crypto market. Always when I got money, my birthday, Christmas, you name it, I got that money and invested it because I didn't need it. So every time I had some money, I put it in. Now, sometimes I already knew, oh, in the summer or then I need to spend, I need a new phone, I want to buy a watch, whatever. And then it doesn't really make sense to invest. If you invest for a couple of months, that's a bit more like trading, because you're not, trading or investing for 10-20%. Trading for, a quick, in those 3 months, a quick 1-2-3% gain on my capital, and on 100 euros, that's, for example, 103 euros, 3 euros profit. Alright, who cares? But when I was younger, I thought, okay, 3 euros profit is 3 euros profit. Well, in 3 months, you can't predict the market. The market can just straight dump and dump 20%, and then you just lost 20 euros for absolutely no reason. And first of all, as well, you pay costs. So when you buy something, surely not on an exchange, but on a site or a broker that's purely investing, you buy, for example, 1-2% or a set 50-cent fee, that's already 0.5%, or sometimes what's even 1-2% of what you invest. So that's already possible profit that's gone. So that's why investing with small amounts of money, and surely for the short term, is not really worth it. You can start trading with $100, with $1,000, but don't invest 10 euros, $10. Sorry that I mix the euros and dollars. Don't invest 10 euros or $10 every week, every month. It's not worth it. Another personal thing is my view on assets and capital. I'm a big fan of having as much of your money in assets. It can be crypto, stocks, gold, anything that holds value over time. But of course you still need cash for your daily things, so don't invest 100% in Bitcoin, and surely not in one asset. I prefer my money working, but also to have it liquid. So if I need the money, sometimes I need money, of course, everyone needs money. You don't want to invest in things that are not liquid, so not in houses or watches or anything. More like crypto, stocks, gold. The key is liquidity, that you can instantly cash it out. That's very different than houses or illiquid assets. But at the end of the day, every situation is different. That was just a quick thing from my end. I like to have all my money in assets, not just in the bank, losing value over time. It's all other story, of course, but still liquid assets such as crypto, stocks, gold, you name it. So another big difference is in crypto, focus is key. If you're starting, surely if you're a starter and you start trading crypto, trade Bitcoin and Ethereum, maybe Solana. If you start trading Forex, just only do gold, just start. If you're investing, you don't want 100% of your capital in one single asset. Even if it's something safe like gold, you don't want 100% of your capital in gold. You want to have 50% in gold, 20% Bitcoin, 20% stocks. Don't have everything in one asset. So that's very different. Crypto, you want to focus on a couple of assets, 1 to 2 to 3, and if you invest, you want to have a broad portfolio. So our main focus is trading, but price action can also help you with investing, as I mentioned, because price action is not an indicator. It shows human behavior and what price is doing. You can literally, with our lines, with our horizontal lines, or levels to hold, levels to gain, what price is doing based off liquidity, you can actually also, for investing, make better decisions. So as mentioned, trading and investing overlaps a lot, but you don't want to trade as an investor and you don't want to invest as a trader. These are still two different things, but as mentioned, they overlap, so you can use the same strategy, especially price action. You can use a bit of the same plans, but then just short term or long term. But in the end, there's still a lot of key differences as mentioned in this video. So I hope I educated you guys on this topic, understand the difference, and you're already ahead of a lot of people by this basic info I just told in this video. This was no rocket science, it was just basic info, some differences, some similarities. But yeah, I'll see you guys in the next episode.